Well, happy Friday, everybody. Well, that depends on where you are in the market, if this is a happy Friday or not. Um, before we jump into this, my name is Stephen Meade, of course, with Domicile Real Estate, where we are on a mission to help California's renters become homeowners. We think that's a pretty big deal, especially in the long run and what's happening to rent. This is our first time home buyer market update for May 6th, 2022. And before we jump into this, I just want to talk a little bit about a lot of the things that are kind of swirling around there and things that I think it's important to think about. Number one is people are talking, are we on the verge of a recession? As an economist, I will tell you, I am not sure. Another question is, have we reached a breaking point on home affordability? We finally kind of hit that point where, there's just the payments are too out of whack with rents, et cetera, or have we hit kind of at least a point where there's going to be resistance to prices going up further, right? Especially if interest rates continue to move upward, which really has been the story the last couple of months. Watching the prices, go up a little bit, but it's really those interest rates that have kind of reduced the affordability and buying power, especially for first-time home buyers who are particularly sensitive to this. So let's go through and see exactly how the market is reacting to this. We can answer those questions, or at least start to get an answer, right, on where we think this market is going. And I will tell you, I do think this market is different than it was 30 days ago. It is a different market. So let's start with closed prices. Now, do bear in mind that this is based on data that is essentially, this data is essentially 4 to 6 weeks old. So I will tell you, kind of looking at this stuff, if we have our little arrow here, you can see that our price on our entry-level single-family home dropped, and it dropped by a lot. Now, unfortunately, the reality is, what did that take us back to? It took us back to April 1st pricing. So we've gone backwards 1 month in pricing. I don't know if there's a huge story for that. If you look here on our entry-level condos, it's kind of a similar situation back to around that April 1st pricing. What does this tell me? It kind of tells me that we're seeing some stagnation. We're kind of seeing a little bit of something bouncing off a bit of a ceiling on prices. I'm actually a little bit relieved to see that. I think that, if you watch our regular podcast, I'm gonna go off share for a second. If you watch our whole market podcast, we actually ran an analysis with market rents and with some other things. And, there's a gap, right, that you see between where have payments on housing gone and where are rents going. And rents are still rising, believe it or not. In fact, they're accelerating their rise. So we are seeing this rise across the board, but the payments have risen quite a bit faster, especially because of those rising interest rates. And whenever you start to see a gap in there, I think that's when you start to worry. When you see these prices start to kind of hit a little bit of a ceiling and bounce off of it, what that tells us is that, that the market is saying we see the gap too, and this gap needs to narrow a little bit. We need time for those rents to catch up with these housing payments before any kind of real price appreciation. And when I say real price appreciation, I mean, something that's over 5% a year can resume. So let's go back in here. This is a 1 week trend. It's really hard to draw a bunch of conclusions from just 1 week of data, but I think the writing's on the wall that, we've kind of hit a bit of a, I don't think we're going to see huge price increases now. If you're a buyer sitting on the fence, your worry is not so much that prices are going to go up significantly. It's that rates will keep going up significantly, and you will see what you can afford just erodes further and further and further. So let's see here. I know I accidentally hit that there. Next, I'm having trouble getting to our next slide here for a second. So just give me a little bit of room here. Oh, not sure why we went away there. There we go. I think we are back here, and I can guess. There we go. Next slide. Okay. For some reason on my new laptop, Zoom doesn't behave quite the same way as it used to. If you look at our payment, again, similar story, you see this rise, right, in payments. Obviously, this is pretty dramatic, but then you see us again kind of going backwards a little bit down here. Same thing on this one. We've kind of this rise has sort of flattened out on payments. And I think that that's really something that's important to see. We peaked probably around $5,400 a month, but I bet we've actually backed down just a little bit off of here. And then again, our minimum household income is of course also back down a little bit. Now we're down below 130,000 again to afford that entry level first quartile single family home. I also want to talk about our absorption rate here, and I want to talk about maybe the last month or so. I personally love this statistic because I think that this statistic really says a lot as sort of a quick and dirty, how competitive is our market? And one of the things you noticed is that if you look back here, we kind of have seen a real erosion, right, in this absorption rate. That means our market's gotten less competitive, kind of dropping down here, right at around 70% for both our entry-level single-family home and entry-level condos. Like, we haven't really seen a sustained low absorption rate like that in a long time, but it bounced back off of those lows. This is not going to suddenly turn into a buyer's market, I think, as much as people really would like it to. And there's a couple of reasons for that. We've talked about them in the past. We fundamentally have a shortage of housing. We also have a situation where we have, I think, a lot of buyers who have left the market, not just because of interest rates, but because they've been frustrated. So the second they feel like it's getting easier, some of those buyers come back into the market. So I don't think in this immediate future, there's really a pathway to kind of a sudden complete buyer's market. If you go here to our next slide, if we look at total inventory, I think this is probably the best news, really, if you are a first-time home buyer. So if you're in the condo market, inventory's gotten better, but it's kind of stalled out a little bit. But if you were in that entry-level single-family home market, this is the most inventory you have seen, really, probably since around July of last year. I mean, that's really astounding, I think, and I think it's something to take note of. If your biggest complaint in this market as an entry-level home buyer has been that there's nothing to buy, I think that complaint is going off the table. Now, you might not like everything that there is to buy, and I'm gonna kind of talk about that for a second, that market stratification, because I think that's important if you're out there in the world, if you're thinking about buying, understanding sort of realistic expectations. If we look at this 14-day still active, what this measures is we look at all those homes that hit the market in the last 14 days and what percentage of them are still available. We really saw these numbers go up, but now they've kind of eased back a little bit, especially on our condos. And I think we're going to see this entry-level home ease back to the 70%. That's about our long-term average. It means we're going to have a spring that looks a little bit more like late summer of last year. And, I think that's a good thing if you're a first-time home buyer. It definitely is a little less competitive out there. Now, if we look at our week supply homes, again, we sort of crested around 4 weeks, and then we've fallen back down again here at 3.68 weeks. If you look here on the right side of the graph, I'm going to bring out a little arrow right there. I think it's important to have some sense of perspective. I think relatively speaking, this is not a bad level of inventory. In fact, it's a pretty good level of inventory. Again, think mid to late summer of last year, it's that level of inventory. The problem is, in the grand scheme of things, 3.75 weeks of inventory is really not that much. It's better than it's been, but nobody would call this an inventory rich market. I don't think anybody would consider this an inventory rich market. I want to take a second and talk a little bit about strategy if you're a buyer right now. And one of my clients asked me the other day, if you were a first-time home buyer in this market, what would you do? Would you wait? Would you buy something before interest rates go up further? Would you do some variation of that strategy? And I always give this preface before I give people advice. I tell them, this is what I would do. You're asking what I would personally do, which may not necessarily be what you would do or what works for you. But since you're asking, I'll tell you what I would do and why I would do that. So if I'm in that marketplace right now, I think that, the danger I see it is, what is the upside if I wait? Well, the upside if I wait is that there is the possibility that prices could be lower. And I think there's I would say there's maybe a decent chance of a 5 to 10% in the next 36-month period, right? That there might be a point in time where things are 5% down. The problem with that is 5% is like less than 6 months of the market's gains that we have, the last 6 months, right? Really, it isn't that much. I think for me, I would be an opportunistic buyer. I would not be out in that marketplace saying, I need to get into the market, I need to buy whatever just to get something. I think I'd be a more discerning, opportunistic buyer. I'd maybe start looking at those homes that are not getting as much attention, right? These are actually my favorite kind of houses to buy. I'm going to go on a side here. This is totally worth it. I promise. Keep listening. Even though this might be a little bit of a circuitous story. So I love homes that are overpriced and have been sitting on the market. And I know that sounds like a strange thing to love, but I love that. I'm going to tell you why, because I'm going to give you the psychology of the seller and why, if you stumble on the right house, this could be a really great thing if you're a buyer. So I also like homes that have a lot of hidden potential. I think that's where you make your money as a buyer, is in seeing things that other people don't see in houses. I think that's the money. It's not because you upgraded the counters. That's not how you that's not how you build equity. That is just how you make a nicer house that is worth more, but you have to put money into it. Where you make money is when you see things that other people don't. So I like these homes that have been sitting on the market. We're starting to see more of these, right? The top 25% most desirable homes in any price range, those are getting all of the attention, and then there's everybody else. And so I like these everybody else houses, right? Because think of this, if you are a seller of one of these houses, you think you're going to get X dollars for your house, you overprice it, you put it on the market, and guess what? Those multiple bids you thought you were going to get don't come. Now, if you're a seller, and if you're like almost any other seller I've met, you will hold on to that idea of what you think your house is worth versus what the market says way too long. So a good buyer who is timed right, and some of this comes down to luck, will go in there into a home like this and do a little bit of a lower offer right at that moment where that seller was contemplating a price reduction, getting tired of their home being on the market. Maybe they have needs to sell, like that they were just doing this because, you know, they bought into their house already, so they've moved out, they're carrying 2 payments. Who knows, right? But you catch them at that time when they're starting to get a little bit more desperate. You time that right with a well-crafted offer, and I think you can actually get a home like that for less than had the person priced that home correctly in the first place. I think their strategy as a seller, you know, they're going to go to their agent, they're going to say, we didn't get multiple bids. You know, what's going on? I'm starting to get worried that interest rates are going to go up and I'm going to be stuck with this house. A well-crafted offer can really take advantage of that situation and that opportunity and sort of be in the right place at the right time. So those are my favorite kind of houses. So if I were a buyer right now, I'd be looking, okay, I said I wanted turnkey, but am I willing to do some work? Am I willing to look at a house that has a problem I can solve, like a terrible backyard, or, you know, it's got some looming crappy apartment building in back of it? By the way, plant trees. You know, I think there's a lot of reasons to kind of go after those scratch and dent houses right now, because I think there's a better opportunity. So for those of you who've been asking, what would I do? That's what I'd be doing right now. I don't think I'd want to roll the dice on interest rates going up further. I also see some signs that inflation might be abating. And if that happens, we might actually see a reversal on some of these rates. And that would push prices higher. So it's one of those things where there's probably a couple things that will make prices go lower and 3 or 4 that could make them go higher or make your affordability go down. So I still feel like, you know, odds are that waiting puts you in a worse spot. Trying to time that market is a little tricky. So that's what I would do. I hope everybody's having a great weekend. We are out there with buyers this weekend. If you'd like to be one of our buyers, if you'd like to work with us, definitely reach out. We would love to work with you. We have a link down below for a no cost, no obligation, 15-minute consultation. We'd love to work with you. Do not forget to like, subscribe, and hit that notification bell. And we will see you again real soon.